when you're setting up a tech business, everything is about not perfection, but speed. And essentially a fund is a basket of securities or basket of investments. And so in a cash fund, it will, which we've actually launched our money market fund. It's called the Ndovu fund. Super excited. Never did I ever think when I was in Kenya, I would have, in BlackRock, I'd have my own money market fund. It's like so exciting. It's like a pinch me moment. And so we launched it actually just in August. We've not even done a press release. So this is like right off the
home of exclusives, guys.
Exactly. Now, holding money in a bank is actually really bad. You should only hold your runway. So that's 3 months of expenses. Should you lose your job, if there's an emergency, that should sit in your bank account. When you're looking at your expenses, always look at the small things, like 200 bob here, 200 bob there. The 10,000 spend, you'll be like, I don't think I should spend that. But the 500 here, ordering a takeout there, that's what adds up. Rome wasn't built in a day, and there's a reason for it. And your portfolio is not going to grow by 200%. And if it does, it's very likely you'll lose it.
Hello, everyone, and welcome to yet another episode of the My Tech Story Africa podcast. Season 3 has been all about finance, and today is no different. I am very excited to introduce to you our guest for today. But first, my name is Alice Kanjejo, and welcome to My Tech Story Africa, the podcast that gives you insights onto the latest tech trends and news that are happening, especially across the African context. Today, I have Radhika Bhachu with me, and I'll give her the opportunity to introduce herself.
Thanks, Alice. I'm super excited to be here. So for those of you who don't know, my name is Radhika Bhachu. I'm the co-founder of a company called Ndovu. And at Ndovu, we empower you to take your hard-earned money, invest it responsibly so you can achieve financial freedom. And we've been in business for now 2 years, and it's been a wonderful, incredible journey with lots of highs, lots of lows, but a lot of learnings. And I'm super excited to be here to share a little bit of that.
We are very excited to hear that story. Before we get into that, guys, make sure that you follow My Tech Story Africa on all the major social media platforms. We are at the 2K mark. I'm hoping by the time you're watching this video, we are at the 2K mark. If you're not, it means that you are one of the people that maybe has not subscribed. So make sure you do that, as well as check out our newsletters at mtsafrica.co/join. Our website is also getting a revamp. I'm very excited to share that with you in the upcoming episodes. That being said, we can get into the episode. So Radhika, before we get into all the gist of it, maybe you can start by introducing yourself and just how your journey began.
Yeah, no, sure thing. So, like most of us, we're Kenyan born and raised, had the opportunity to actually study abroad. So I went to University of Nottingham and I studied mathematics, and clearly after the natural progression was to go into finance. Everyone who does any sort of economic course or mathematics or anything like that actually ends up doing finance. And I got onto a graduate program at Deloitte, and I was an investment consultant, which simply meant that I was advising pension funds how to take their money and invest it so they can pay their liabilities. Mm-hmm. And it wasn't as exciting. It was a lot of like asset liability modeling, a lot of Excel sheets, VBA, etc. And I realized very quickly that my skill set was better suited with people.
What made you make that realization?
So I think it was a lot of my team members as well. So my manager would say, actually, you do really well with trustees who are significantly older. You have emotional intelligence. This is an area that I think you can actually excel in. And I think a lot of questions young people should be asking their colleagues is like, what do I do well? What do you think my strengths are? And what can I improve on? And I think it gives you a bit of an insight onto how people view you, which I think is really interesting, because as an individual, you probably have the same thing. You'd say, oh, I probably am not so good at Y, but actually somebody else might perceive you differently. And so just understanding from other people's perception, what are you good at? And ask those questions, especially your manager, your boss. And actually it's really interesting. Since I've come back, I found, because now we have a team, and people are quite scared to ask the right questions. Like, what do you think I'm good at? Where do you think I could excel in your career? So I'm trying to build that culture in my team.
That's really interesting. I think most of the times you try and ask yourself that question when you do dedicate the time to actually sit back and think about what you're doing, but really from other people. I guess, would you say there was a mismatch in how you perceived yourself and how other people were perceiving you at that time?
Yeah, so I wouldn't say there was a mismatch. I would just say that I was trying, because I did mathematics and I liked the asset liability modeling and the Excel spreadsheet. I didn't.
Loved it.
Yeah, I clearly.
Oh my God.
Yeah. And I probably didn't see the other skill set that I had, which was being able to have a conversation, build a good relationship. And so when I recognized actually that's something that I'm good at, I moved over to BlackRock, which is the world's largest asset manager.
Yeah.
And I joined the sales team there and managed a really large book of clients and actually was able to understand, like, how do you do business? And interestingly enough, doing that in London, business language is very different to doing it in Kenya. And when I came back, I had to relearn how to do business in Kenya.
Can I ask maybe what that difference
Yes,
was?
definitely. And I'm actually quite excited to share it because in London, there is a personal element, but it was still very transactional. So you would call a client at AXA, let's say, and you'd speak to the representative. The first 1 minute would be about work, about personal things, and the rest was very transactional. Like, hey, you owe me this. The thing I love about doing business in Kenya, the first 15 minutes is like laughing, talking about the day, teasing each other, saying, oh, you haven't come back to me, you're too busy for me. And then the last 1 minute of the conversation is like, oh, by the way, you need to help me with XYZ. And I really love that.
That is true. It's a lot of people interactions and connections. I think it's very difficult for you, or it's more tedious for you to kind of scale yourself and your branding, or even just do business in general here if you don't have that ability to also engage and connect with people, because that's what set people apart here, being able to still have those kind of playful conversations and still manage to get the job done. So yeah, I'm glad that that's a skill that you discovered at that time. I think it definitely helped you to have a bit of experience in both, right? A bit of sales, and then of course the investment portfolio management that you were doing back then. So
yeah, and then so after, worked at BlackRock for about 6.5-ish years. And in 2019, it's a long time, but I was ready to come home. So my husband and I wanted to start a family, and just looking at our lifestyle there, you don't have help there. It's very it's not easy. I always laugh sometimes, and people say Amazon Prime is the best thing that's happened. I'm like, come to Kenya. Amazon Prime was happening back in 1998. Like, people would deliver things to your house immediately.
Yeah, I think Kenya definitely is more forward comparatively even to other African markets when it comes to some services and tech adaptation, really and truly.
So actually tech adoption in Kenya is significantly high compared to other markets. And I think that's why it makes it such a great environment to come in and start testing new products and seeing what works. Yeah, so when I finished at BlackRock, I decided to come back in 2019, and I was clueless about what I would do in Kenya. And so you can imagine, I knew that so the asset management industry is actually quite new compared to the West. So in Kenya, the asset management industry has been around probably 24 years compared to the US market, and the UK market, which is a lot longer. And so I was a bit worried as to what would I do. So when I came back, I was having lots of coffees. I was all coffeed out the first 3 months.
Just trying to engage with people. And also I will commend you. That's something you're really good at, just reaching out to people for just one-on-ones. So,
and I think it helps, right? I also feel like it gives you, it's a quickest way to learn what people who are in the industry really think about the market without doing a lot of reading. And I think it's really helpful. In fact, recently I was listening to a podcast, and one of the key things they said for you to be a successful leader or a business person is actually to have a panel of people that support you make really difficult decisions. And weirdly enough, actually being in the antler space, I now have friends who are founders of different organizations, where I say, hey, what would you do in this situation? And the feedback loop is instant.
It's instant. And people would assume that, okay, this might be a big person, I don't know how to reach out to them. Most of the time they respond on LinkedIn when you reach out to people. And I completely agree. I think one of the common things that we have, actually how we met, was through Antler. And this co-working space. This is actually where we're recording right now. And it's actually the space that inspired me to start this podcast, just because I was fresh into what tech is. I mean, I had worked previously in tech, but I hadn't really had a good solid background. But in Antler, meeting all the people from the different cohorts and all these amazing ideas that people are building, I think that sense of community and people you can actually engage with, 100% was a good way to start for you to penetrate this market.
Yeah.
Yeah.
And I also think it's not just tech. If you want to do anything, let's say fashion, people love sharing their stories. So just reaching out to them on LinkedIn and what is that thing? 8 degrees of separation? Yeah, somebody knows them. So
Yeah.
find through your network who knows them and get a coffee with them or send
Yeah.
them a message.
Yeah.
Keep it short. Because if I'm really busy and you write me an essay, I will say I'll come back to it. And then I never will. But if you go, hey, how are you? Saw you here. And tell me what, like say I need XYZ or I need help here. I'm like, okay, cool. Maybe I do have time for them. And I think what also helps is that if you have any commonality with that person that you're reaching out to, maybe you saw them on, like saying, I heard you on a podcast, or I met you here, or I'm really impressed with this particular thing you said. It gives me more of a reason to be like, oh, maybe I should reach out to this person.
Yeah.
So just knowing like how to build that connection, even though it's on an email or a LinkedIn message, is really important.
Yes, I 100% agree. Okay, then I'm going to take you back to the narrative that you were telling us about your journey. Now you're back in Nairobi, you're having coffees with people. What was next? What were you thinking that, sorry to interrupt you, were you thinking you were going to build something from scratch? Now that you came from working from BlackRock and your previous experiences, was it instantly that you were like, yes, I'm going to do something, build something here myself? Or what was your purpose even when you were reaching out to people?
So originally it was just discovery. So just speaking to people to say, okay, what can I do in this space? And weirdly enough, being a female, I love fashion, I like skincare and all those things. And I thought, oh, maybe I'll start something in that space.
Yeah.
But then once having conversations, realized actually there's a lot more I can do. The everyday African doesn't have access to global markets, which for me blows my mind because I spent all my career looking at how can people invest their hard-earned money and grow it whilst they're sleeping. And I realized very quickly, like, oh, wow, there's a huge gap in the market. And I was also interested to understand, like, why did traditional asset managers, banks offer this? But the thing was, I didn't know how to build that type of company. I just didn't know.
Yeah.
And so I was like, okay, what's the quickest way to learn? And it was join an accelerator program. So I just Googled what's the quickest way to learn how to build a tech business. There was a program called Antler at the time. It just started. I was on the second cohort. And yeah, the rest was history. I applied, I got in, I think I applied in August, like end August, and I got in for the September cohort. And yeah, it was very exciting. And I didn't know much about the program, but I knew that that would be probably a quick MBA to say, okay, how would I go about starting a business?
And you weren't specific at this time what the business was going to be. Okay.
Yeah.
And I mean, just before we get a little bit into that, maybe you can speak on your experience being in an accelerator here in Nairobi. Like, how would you speak on the experience there?
So to be honest, it was something that I had never done before. So I was always in corporate. Corporate is very different to building a company. You know, you are not in the driving seat. You're cog in a big machine, but you're still valuable because without you, they can't grow. But it was very structured. So you have your manager who you can say, hey, I need help on this. There's somebody who's already set up all the bare bones, like governance processes, like how do you book annual leave? Like the very basic things were already sorted out. But I think the biggest learning I had joining an accelerator was how you should be thinking about setting up a business. So typically the average individual will say, I need to go source the product. But actually the biggest learning I took away was that forget the product, go speak to your customers. Who do you think are your ideal customers? And who do you think will buy and pay for your product? And so the Accelerator program was a mini MBA. They take you through like different modules and it's super quick because by the second or third week, you're speaking to customers. So you're saying, hey, would you actually, Alice, I'm thinking of
Product
setting...
idea done.
Yeah, so quick, like, oh, this is what I'm thinking to do. Would you pay for this? And it is actually still how we do things. Before we launch a actual product or feature, we go out there and we speak to our customers and we say, hey, would you buy this and would you pay for this? And that's when we decide, okay, yeah, this is something worth building.
Okay. And I'm going to get a bit more into that as we move forward into the episode because I'm really interested to know more about what marketing and sales strategy or how you think about it. But really interesting. I think that is another thing that piqued my, I've said interesting, but interest at that time is like, I think I was, again, fresh into the startup space when I was also coming in, working for Honeycoin at Antler. And everything is just moving, like they're in the office today. We're thinking of an idea. Great, let's build it. What do we think of this? And that was such a contrast compared to, and it really feeds into you as well. There's an addictive element to it because now you're not just working
100%.
alone. Everybody's like kind of pushing each other to kind of do this. And maybe you can also speak on, okay, aside from that, what are some of the benefits, other benefits that come from an accelerator? Of course, there's the possibility of funding, but
yes.
are there any other things that you think?
Yeah. So obviously the know-how of like, how should I think about approaching a problem? Also, so then you also have mentors because there's other people in your space also guiding you on how you should be thinking about the problem. And if you get stuck, there's always someone to help you. I actually met my co-founders here.
That's common.
Yeah, it's very common. And I think one of the most important things when you're starting up a business is to make sure you all have very varying skills. So we've set up a fintech, so I needed someone for regulation. It was a fintech that was going to be built on an app, so I needed someone for tech. And then we need someone with the investment know-how of how to work. So all three of us have very separate skill sets. Because what I found during the program, when I was with someone who had a similar skill set, you're always thinking, I can do it better. And then you're stuck at a decision. It's almost a blocker because it's, what do you think? What do you think? Okay, they're both.
Why don't you think what I think?
Correct. And it's like you don't move fast enough. And Alice, I think you really hit the nail on the head. When you're setting up a tech business, everything is about not perfection, but speed. So the way you said, Honeycoin, you thought of an idea and they're already building it and out it goes to market. That's exactly how you have to grow a business in tech because you just don't know what customers will pay for. So
you have to try everything.
Yeah, and that's the thing, right? And the reason that you're trying everything, you end up becoming successful because you're like actually trying everything and then knowing what is working and not working. So being able to measure and having some objectives to say, okay, if I need 100 paying customers, even if you get 80, like, right, is it really what I needed? Because I said I needed 100 customers and then sort of looking at that and saying, okay, it's not viable, X. But just being able quick enough to make that decision. And it's something I've had to learn.
But I guess a bit of a 50-50 double-edged sword because it's like, right, sometimes I've seen this problem in some startups, like you're moving things to production before it's ready. And of course, there are a lot of, it's tech, so maybe there can be breaks, or maybe you have a feature that is very linked to a partner that you're working with as you've integrated into your platform, and then the partner pulls out, so then you have to pull out the product. It's also confusing maybe messaging wise. I mean, maybe I'm guessing in the context of a super app, maybe it's different when it's just a very one product offering. But sometimes I feel maybe that is also a risk because, okay, you don't have time, but I also understand that you need to build. So how do you mitigate that window?
So it's just about, so a couple of things, we learned the hard way again, somebody would think of an idea, we'd go and build. And so now we do it very organized. So if you think of an idea, you're responsible of proving that this is something that we should do. So what do? You get onto the phone to the customer and you're like, right.
How do you reach out to customers? You've mentioned a lot about reaching out to customers.
So we obviously have built lots of customers and relationships over time. But now we have strong relationships with them. So we contact them every month. We have a sales team, etc. Oh, not a sales team, but a relationship management team that works with you to help you build towards your financial goals.
Which is good, especially in an investment kind of app.
And actually, a lot of our customers say they love the relationship management part because it's an accountability manager. So it's like, I'm holding you accountable to save and invest because you told me you wanted to do that. So it works really well. But it also means we're able to quickly validate a feature or a product that works. Historically, we would have done the same thing, gone, built it, and then expected people to try it. And if it didn't, it's like, it's okay, we've lost that. But now we will build like a very simple MVP and then take it to a customer subset and say, hey, what do you think of this? Would you use this? Would you pay for it? Does it make sense? And we have very clear objectives that you have to meet. And if it doesn't, then we scrap the idea. So the learning time is, so instead of building, a lot more time is spent on ideating, validating. You have like Figma screens. And so Figma is just a software that you can use to design the app screens. And so you use those before you actually send it to the tech team. And it's taken us a while, but we're finally there and it feels great.
I think everybody's just trying to survive because you also have pressure from investors,
Oh,
you
tell me
need to
about
get
it.
customers. Okay, this might be the one the customers like, so you throw it out there.
Yeah.
Especially in finance, then maybe money is delicate, right? So maybe you're
Yeah.
getting cashbacks because of transactions that shouldn't have followed through,
Yeah.
etc. So it's very interesting. I think we've pivoted, but I think it was very important for us to just highlight some of the things that we've talked
The
about.
last thing I would say on that.
Sorry about that.
No.
Go
So I'm
ahead.
just saying the last thing I'd add on that is because so this is something that I've spoken to a subset of cohort founders like myself at similar stages. Because you get external pressures to grow, you're told a lot of the times find other avenues to grow your revenue. But I actually strongly now believe after 2.5 years that if you just stuck to your core and really like spent a bit of time there to say, okay, can this work? How do I make it work? You're actually going to do a lot better than like trying to put like 7 products on there and not really do anything well. You're just putting, so a lot of neobanks will do it, or fintechs, or remittance companies, they'll say, okay, right, we've got this and now we're going to add this and we're going to add this. Actually, just stick to being a great remittance company. Just stick to being an incredible wealth manager. But it's the outside pressures. And so just being quite aware that that can happen and being really mindful, like do one thing, do it well. And now as for us as Ndovu, we are doing one thing and we want to do it really well. And then eventually in a year's time, we can add something.
You know what, Radhika, I 100% agree with you. I find that startups that go that direction of doing almost having super apps rather it's difficult for them to scale compared to if you just do one product and do it really good. We had a guest on this podcast who I've forgotten who, but I remember vividly them talking about a founder's burden, and that is basically the burden of having an idea that you have to follow through in. I think we call it that because you can't stop thinking about it. You're thinking about it every day.
In your sleep.
In your sleep, when you wake up, you're writing notes constantly. And in the process of external pressures now coming in, when you finally decided to pursue this journey that entrepreneurship has in store for you, not to forget why you were feeling burdensome about this idea in the first place. What were you internally at core believing fully like you wanted to solve a problem for? And most of the times it will just redirect you back to why you even started things in the first place. I think I do that as well on this platform, My Tech Story Africa, right? We have the newsletters that are coming up. We have, we're trying to do content outside from our podcast content, rightfully so, because we're just trying to be sustainable. But sometimes when I'm thinking all these ideas, okay, we have to do events, this and that, and you just take it back to why I wanted to do this in the first place, which is to share tech narratives of people who are doing awesome things.
And do it well.
Grounds you and do it really well. Like maybe I don't have to start doing everything else. Like, does this relate to the core things that we wanted? And sometimes you just want to add things, and if you look at the value add, it doesn't even add up. So it's very good to evaluate, like very, very often, like, wait, what are we doing and why are we doing this in the first place?
And does it align? Does it align with my vision?
With what the vision was in the first place? Are we having other people who are, influencing my vision? Such a tricky.
It is hard. It's hard.
Path to follow, but still encourage everybody to try and pursue this. Leading back to the conversation we were having about now the startup that you started, was it immediately Ndovu? Did you know this was an investment platform, or now what was the journey then?
Yeah. So, so fast forward, come to September, I joined this Accelerator program. I have no idea what I want to do. I remember trying skincare, fashion, some data idea, which I just felt out of depth, right? I didn't know, like if I was going to set up a fashion line, I don't know how to design clothes. And also, is it that scalable? Good, big question. Like, can I get to what a VC metric is in venture capital?
That's a very good
metrics.
consideration.
Yeah, and then data was great. I thought, like, I still believe in data. Now we hired a new data analyst so that we can really dig deep into what is going on in our business. Data is everything, but I didn't know enough. And so the way I picked my business idea was to say, okay, what do I know? Where is my strength? What do I know? And I've spent over 14 to 15 years in finance. I know investments really well. And being at BlackRock, I had access to every investment strategy you can think of. And my motto has come back to keep it simple. Hold an index fund and you will grow on average 8 to 12% year on year on the dollar. You're not getting those kind of returns anywhere, especially at a low fee. And the idea is that you start simple, because when you're young, you have time on your side. So when you're 20, even if you don't have loads of money, but you're investing 7,500 shillings or 10,000 shillings every single month, that will go a long way because you have time. And just making that behavior really important. And then if you are older, you have the higher value ticket size. And so but if you build that investment habit now, it means that when you retire, are less stressed.
Because you've built the habit of investing.
And so that was my skill set. Like, I know that's how you make money. I know that's how I take my hard-earned money, invest it. And, I knew that, okay, at this age, I need to do this. And in order to get to the next level, so I always recommend having a financial plan for yourself personally. So for example, Alice, you're doing this podcast, it generates X amount of revenue. In 5 years' time, you want the revenue number to look like this, and then you work backwards. And in that journey, you either need to take really high risks, that's going to get you there, or you can invest smartly and you'll get there. So just being able to know, like, how do I split my risk versus just keep a simple investment strategy that I know is going to be my safe haven to when I get to 65. And those are the things I knew. Right? Those are the things that I knew. No one needs to tell me anything. It's really interesting. I was speaking to someone in the office yesterday and they said, I've done the CFA, but I have no idea how to invest. And I said, yeah.
That is a big problem.
Yeah, so the CFA is a Chartered Financial Analyst course. It takes 3 years to do. It's so difficult. A lot of people do it and they do it for portfolio management, but they still don't know anything about investments. And those are the things that I knew. That's the value that I brought. So I was like, right, if I know how to do this, and there's a big gap in the market saying there are so many Africans who are excluded from formal financial markets. And the key reasons were, firstly, the access point was too high. So in order for you to get started in investing, you would need like $10,000, which is a lot of money.
That's a lot of money.
Secondly, people just didn't know where to start. They lacked education. And then lastly, the options available were very bland. So you just get a money market fund, you get an equity fund that's underperformed over 6 years.
Or real estate, that's default.
That's default, really illiquid. They just didn't have the right options. And when I looked across the continent, I said, this is definitely something that we can build. And it's something I can do better than anyone else in the room that I was in. And that's how I made the decision to say, right, let's explore wealth tech. And I started off in a team with two other individuals who we didn't proceed to found the team with. But unfortunately, two of us had the same skill set. So we had that challenge of making decisions. And the other person decided to go back. They were not from Kenya. They decided to go back. But actually, I met my two co-founders, GP and Ro, in Antler. And weirdly enough, when you first join the program, they make you do speed dating. And we first speed dated in the first team. It was so easy, like working together. I was like, okay, what's the idea? Right, cool. Anyway, so how are you? And like, where do you come from? Like, it was really...
It was just meshed well even outside of work.
Yeah, and it was just, it worked really well. And when we went through the Antler program, we didn't get funding. One of their challenges was that regulation is really hard to acquire. Fast forward 7 months, we got our regs, but it's, again, we had the right co-founders to be able to do that.
Oh yeah, wait, let's just a bit on that, because that is the biggest war that fintechs have really and truly right now across the board and across the continent is regulation. So for you to say, okay, 7 months, usually stereotypically from what I'm seeing, how the fintechs work is, okay, let's build a product and then somewhere along the line, that's when we start thinking about regulation. But for you guys, it seemed like you thought about it from the jump.
Yeah.
And I want to know a bit more about that.
Yeah. So, and I think this comes from, again, knowing your space really well. So when we set out to build a business, we said, what are our risks? And one is regulation. If you don't have regulatory license, the regulator comes in, can shut you overnight, and there's nothing you can do about it. And so I didn't want to build a company where we had this really big apparent risk that could happen. And it comes from the fact that I was working at a firm that was regulated, and I've seen the fines that people have been fined, and you can even go to jail.
Yeah.
I don't want to go to jail. And so we decided that, listen, if we're going to build this business, we have to do it with a strong foundation. And the first thing was to make sure we get our licensing. Secondly, a lot of wealth techs in the continent have just gone and borrowed someone's tech to launch. And that's a great strategy too, right? You can launch a tech really quickly and be in market very quickly.
Feed off someone else's regulation, basically.
It's basically, but we didn't want to do that either, because we said, what if we go into market and we realize that the product we're building is not what our customers want? So if we wanted to pivot the design, we couldn't, or the tech itself. And we went in there and we actually said, okay, those are our two main risks. And then we just built everything from scratch. And then, of course, once you have licensing, you become more valuable to investors. So people are more willing to invest in your company.
Wow. Okay. Well, that's advice for you guys. But would you say it was tough for you to get that regulation? Like, what are some of the checks that maybe you had to do now that you did it earlier?
So again, right, it came around, and I knew this then, and I'm still learning this now. The team that you have is everything. It is the people that build the business. So at that time, I had my co-founder, Ro. He actually has over 19 or 20 years of experience now in the local market. He worked at the Nairobi Stock Exchange, private equity locally, and he knew people at the capital markets.
Makes sense.
And so it's like, right, we want to apply for this. What do you recommend is the best way? And they're like, hey, we think this is the best. Enter the sandbox and then.
Yeah.
And so we did that. And it was very quick. We got it within 9 months.
Wow.
We were in the sandbox for, I think, only 3 months, then graduated. And so we were able to do it very quickly. And that's been our strategy today as well. So we do want to expand into other regions, but we have to have licensing. And I think we have like 7-8 applications out there. We know it takes time, but we have nothing to lose.
Yeah,
let's do the application.
Do it first. And I think it connects to what we're talking about earlier on in the episode. Is just one, starting those conversations early, like do your research maybe, but one of the people you reach out to might be able to help you sort of get to the right people or the right path to take when it comes to regulation, especially when you're a startup. And I also think it's the most effective way for you to scale without having that high risk of your startup being shut down, where especially, and like you said, your product being able to be adaptable, because when you work with partners, we're basically working with what they sort of are working on. And I see this as well with Benjamin Fernandez, who I'm sure you're acquainted with. He also very strongly stands for getting regulation first. He's gotten licenses, and the more you get them, the more confidence that other regions get for doing that. So yeah, that is food for thought if you're someone seeking regulation right now. But back into investment, I mean, okay, now we have this product that we're building. What was it now scaling once you figured out this is what we want to do?
Oh, so it was a lot. So what did we do first? We just focused on getting our first 100 customers. So actually, before we started building, we went out there and we said, hey, I'm launching this product. Once it's launched, how much would you invest? So it was almost like a dummy commitment to say, hey, how much would you invest? So you can do this with any business that you're doing. It's like, hey, I'm going to build a marketing tool, as an example. How much would you pay $100 for this tool every single month?
Yeah.
And so we did that. And I think we had 81 people sign up with $3.2 million committed.
Wow.
Which is huge. Not all of it converted, in all fairness, when we went live. But it gave me a signal, okay, this is something that we should be building.
Would be interested in.
And then so we built the product. We did it with, at first you just put out what you think the market wants. And then it was a lot of customer focus groups, conversations, and what products could you offer. We then had to go find the back end. How do we access global markets? How does that work? Get your license, etc. And then we launched in February 2022.
And at this time, were you bootstrapping, or did you receive funding within this window?
So we had raised about $50,000 at that time, and we won some competition. So we had a bit of cash. Our team was tiny, obviously.
Yeah.
And then, we started talking to customers. And initially, the way we first grew was more referrals.
Okay.
So actually, my first solution was a Typeform type thing where you're asking people like, hey, this is the S&P 500. This is the last year's return. How much would you invest? And it was Typeform, and you'd manually place the trade back and forth. And nothing.
You have to manually do it.
Yeah, nothing was digital. And then our app came out, and then from there it was all about improving and iterating that app and trying to grow our customers from 100 to 300, 300 to 500, 500 to first 1,000, 1,000 to 2,000. And yeah, it's been step by step.
And at that time, it was just, okay, referrals and just if you know, you know.
A bit of marketing. The problem, I think, one of my biggest weaknesses was that no one in our team knew how to do marketing. And I think for the common person, marketing is like put out an ad and do it on social media and create a bit of content. What I learned that there is, I think, 17 different facets to marketing.
There's so many.
And everything there's almost like a 360. You need all of them for your product to do really well. And that's taken us I would say now I'm very confident with my marketing team and my growth team.
I love them as well. I've interacted with them. Yeah. Okay, we have Ndovu coming in. It's been 2 years in the making. What are some of the things that you've noticed about the investment landscape overall, especially in this market, maybe in the Nairobi market, in Kenyan market, because that's where your primary focus was. But what are some of the problems and solutions that you think Ndovu is providing for that?
Yeah, so firstly, I think traditionally, when we started, this wasn't available, but now traditional asset managers have started coming along. So the first thing was that you'd had to go physically to Sanlam or somewhere, one of the asset managers, fill in a form, invest. And the only investment options you have are 3 products: a local cash fund, a bond fund, and an equity fund. And essentially a fund is a basket of securities, a basket of investments. And so in a cash fund, it will, which we actually launched our money market fund. It's called the Ndovu Fund. Super excited. Never did I ever think when I was in Kenya, I would have, in BlackRock, I'd have my own money market fund. It's like so exciting. It's like a pinch me moment. And essentially what you do in a money market fund, and the objective of that particular fund is to help you take your money, invest it responsibly because it's low risk, and allows you to outpace inflation. So it earns significantly more than money sitting in a bank account, and it's relatively liquid. And the idea is that it is secure. So for example, in a bank, you'd earn 3%, and in a money market fund at the moment, you'd earn anywhere from 13 to 18%. And so we launched it actually just in August. We've not even done a press release. So this is like right off the...
Home of exclusives, guys.
Exactly. And so we're planning. So of course, as you launch a product, you have to let it run for a little bit, make sure it works perfectly, and then you do a PR release. But we're really excited about that. So that was something that had been conquered in this market. I think money market funds they've nailed it. I think it does really well. We see value in a holding one too, because it's a perfect way to build a portfolio. But what we noticed was that the bond funds and the equity funds were actually not making as much money as you could if you just held an equity fund that had all the global products. And the reason this is important, why there's an opportunity here, is because as Kenyan citizens, we're global citizens. We both have iPhone, Samsung or an iPhone. I was complimenting your jacket earlier. I'm sure it wasn't made locally. And the makeup we use, just as being females, the camera equipment we have here is all imported. Nothing is made locally. And so actually just investing in Kenya shilling can be quite risky because yes, we earn in Kenya shillings, but we buy in dollars.
And it's not stable.
Exactly. And so there was a gap in the market because as an individual, I couldn't take my hard-earned money, convert it, invest in US dollars. I could only at that time do it in Kenya shillings. And the difference between Ndovu and the value is that, of course, we made it easy. Your KYC is done within 3 minutes. You're able to invest quickly. You can do it from the comfort of your home. But most importantly, the value we bring is that we want you to grow your wealth responsibly. And I keep saying this, there's that rule that people don't hear it until you say it 7 times. The idea is that when we tell you to invest, rather than buying an Apple stock, we tell you invest in a fund that has the Apple stock in it. And the reason being is that when you are holding a basket of lots of companies, so let's just take a technology sector fund, which is called the Techie on Ndovu, it will have access to all the 300 amazing companies that work in tech in the US. So names that you hear like Meta, Facebook, Nvidia, Google, and the likes. And instead of buying one company where you think like, oh, I think Apple's going to be around for a long time.
You just do a basket.
You do a basket. And you know that tech is going to be around for 10 to 15 to 20 years. Why do you care what company's around? You don't have the time. Forget it. Just invest in the sector. Invest in tech. Like that's all you need to do.
Yeah.
And, and if you hold it over the long term, every year, for example, in the tech fund, it's grown by 22% on the dollar. There was, before us, you couldn't do that with as little as $50. And in addition to that, we actually help you by streamlining the funds that we pick. So we have an investment committee that will look at the funds and say, okay, we've got 20 funds on the platform. Are they still good? Do they do the right thing? Now there's 7,000 funds out there. So as somebody who doesn't know how to invest, you'd be like, which one do I pick?
The one I pick.
Yeah, so we simplify the entire process. And actually, before we started, there was no one else in the fintech space actually giving you access to global markets at a very low incoming rate. And we don't. So there's
stable markets as well.
Yeah, they're very stable markets. Like, so for example, it's amazing because on our platform, we have some funds that returned really strong returns. So last year, the semiconductor fund, semiconductors are raw materials that go into everything smart. So your smartphone, laptop, computer, fridges, etc. And companies such as NVIDIA, Intel, AMD, those are the companies that manufacture the raw material. Of course, our investment committee said, hey, what's going to be around in 10 to 15 years? Tech. What goes into building tech? Semiconductors. Let's put the index on there. And a lot of our customers who joined the fund at the time, because we were promoting that fund via marketing, email communication, conversations, invested. And last year they grew by 72%.
Wow.
And now when we get new customers, they're like, is this a scam? And I'm like, no, it's not. It's just how the market performed and our ability to actually pick the right fund has been like accurate. But on average, I would, there's a caveat there. Yes, we have really strong returns on the platform, but as long as you're earning anything from 12 to 20% on the dollar so when I say on the dollar, this is you're earning this, you're invested in dollars, you're earning the return on dollars. So when you convert back, you're actually getting more because the dollar always goes up. And then you get more Kenya shillings.
Being strategic at the time you do remove your money from the...
Exactly. And so the idea is that just expect anywhere from 12 to 20% and be happy with it. And yes, the markets did do really well last year.
They did, especially in the tech sector and like you said, that fund. And so that's really good and that's promising given that, again, it's 2 years in the making. Startups, sometimes the journeys take time. And this was a really good win. You guys have launched your MMFs, which is amazing. That is a big selling point, especially here in Kenya. I think people really believe if it's something that is not physical, like or land, whatever. They're really skeptical about, making such kind of investments, which I think leads me to my next question. Like you said, there was a 72% return on investment. I mean, then how do you balance basically maybe the will or the need for high returns with the potential risks that are associated, of course, with investment? And, what are the risks working with you guys?
So great question. I mean, in other words, your question is, I want high returns, but I don't want to lose my money. What do I do?
Yes.
Right? And that's essentially it is. We're young. So there are a couple of facets that go into this. So if you're young, it is okay for you to take risk. But again, I would not recommend. So let's take a step back. You have 100,000 shillings. And we need to make sure that of that 100,000 shillings, we're not investing the whole 100,000 shillings into crypto. Because that is a bad investment strategy. The rather thing that you do is you start breaking that 100,000 shillings into buckets of high risk, medium risk, and low risk. So the low risk is a money market fund, holding money in a bank, a SACCO. It's low risk. That capital is going to grow slowly. Now, holding money in a bank is actually really bad. You should only hold your runway. So that's 3 months of expenses. Should you lose your job, if there's an emergency, that should sit in your bank account. So of that, you should actually, on average, so take a step back. If you're earning 200,000 shillings, you should look to save and invest about 20% of that. So all your expenses, your rent, your going out, etc. A key tip there actually is when you're looking at your expenses, always look at the small things like 200 bob here, 200 bob there. The 10,000 spend, you'll be like, I don't think I should spend that. But the 500 here, ordering a takeout there, that's what adds up, right? And you could be only saving 12%, but if you're mindful about those spend, you can actually get to 15, and then eventually as your salary increases, you can make it 20. But the rule of thumb in life, and everybody will advise you, is to save and invest 20% of your salary. So going back to the 100,000 shillings, we don't want to put it in all risky things. I have calls with clients and they're like, yeah, all my life savings are in crypto. And I'm like, oh my God, right? It's scary.
It is.
So what you want to do is you want to balance the risk in your portfolio. So you'll say, okay, of my 100,000 shillings, 20,000 shillings I'm going to put in a money market fund, preferably Ndovu, but up to you, money market fund. And from there, you're going to say, right now, the remaining 80,000 shillings, I'm young, so anybody under the age of 45 should take medium to high risk.
That's what's young
That's
means
young
in this context.
Yeah, in this context, that's what young means. And the closer you get to retirement is when you start taking risk off the table. Then you need to hold maybe 80% in a money market fund when you're nearly 60, because actually you don't want any sudden movements, because the reality of a market is that things go up and down. That's how it functions. You don't want to need the money at the point where the market is down. So if we're talking about young people, which actually is the target audience of this podcast, as well as 60% of Africa's youth, you need to start saving. So we've got a 30%, 20% in a money market fund, low risk, put it away, don't worry about it. It will grow organically, outpace inflation. But you need to take well-calculated risk. Now, of the risks, so I'll define risk when it comes to equities. Investing in a fund like equities, bonds, is low to medium risk, because why? You're not buying one company, you're buying a sector, and so your risk comes down. So in the tech sector, let's say, Alice, you were to invest, and on that day Apple was fined for data protection and they lost 30% of their stock value, their company value. Because you're investing in a fund, all these other companies are doing well. So actually they'll prop up your debt, like they'll prop up the loss, so you're not losing 30% of your investment.
But if you solely were to invest in Apple.
So Apple now is high risk. Crypto is high risk. A business that you're starting is high risk. And so there's different ways of thinking about it. Real estate is always seen as medium risk, but careful, I said real estate. I didn't say land. Land, unless you're buying it in prime areas, has not appreciated over the last 5 years in Kenya.
I hope people can listen to that again.
No, I can say it again. So when I talk about real estate, I'm talking about an apartment where you can rent and you generate income. That is real estate. That's called real estate investing. Buying land, unless it is in downtown Nairobi or like maybe Kenya and areas that are now, we're moving outwards. But if you buy land up north, it's not increasing in price, and it hasn't increased over the last 5 years. And in addition to that, it's illiquid. So you can't sell it easily. Your kids are going to university and you're like, I need cash. You have all these assets, but you can't sell them. So you're borrowing against them, and you're borrowing at a high cost. So going back to how I would think about managing risk in my portfolio. So going back to the individual who's saying, I'm young, I want to take risk, but I also want to protect my wealth. 20% in a money market fund. And I would put, after that, 80% 60% in a fund. So pick the technology fund, pick the semiconductor fund, the S&P 500, which is called the blue chip. And the other 20, yes, if you're risk seeking, you're a techie, you're into crypto, put 20% in crypto. But that means that you have eggs in different baskets. And when the markets do come down, you know your cash fund is secure. It'll continue growing because it grows differently to equity markets. You're taking responsible risk through a fund. And then, yes, you're taking high risk through crypto. And it's going to go up and down, but you can stomach it.
I like that breakdown.
Yeah. And I think it's really helpful to start thinking of even yourself as a business. Because then you start diversifying your risk levels. So I think a lot of us will think, oh, I'm going to go to university and then I'm going to get a job. But actually you should start thinking of yourself as a business. I love what you've done, Alice, is like you're working, but you're like, hey, I can do a podcast because I'm really passionate about it. I'm good at it. And it could turn into something incredible. And so you've sort of said, okay, you have this entrepreneurial spirit. You're thinking of your skill set as a business, and that's how you generate more income. And I think, love it. And the last thing I want to say is that actually being financially and social and economically secure for men who are really struggling in this generation is one of the best things you can do for yourself. You know, once you smartly invest, there comes a point where you're like, actually, I don't have to go to work. My investments are giving me enough passive income to pay for my rent, my food, my kids' school fees. Great. But if you were relying solely on your job, that you have to go to work in order to like bring a salary home so you can pay all of those, I feel the mental stress you have as a female, as a male, is too much, that it's like not like you're just constantly worried. So if you start investing and putting money away responsibly, that goes away, and then
it
you
gives
can
you an opportunity to actually say that, you know what, you need to de-risk yourself. Is
Exactly.
what you're saying. Like, okay, if you're over dependent on a job can leave at any time. I mean, especially if you work in the tech industry, the layoffs, they're
high.
there, you know, and they're high. Last year we had, even in the beginning of this year, I mean, we had the big boys like the Microsoft, the Googles, you know, continually. Wow, we've talked for 50 minutes. The big techs rather have been having layoffs, and not just that. We have a lot of startups that are, you know, going under recently, you know, especially this year. So it's very volatile, and keeping yourself, de-risking yourself is very important. And I think investments could be the best way to do that. I think before I get to the closing questions, because I'm really enjoying this conversation, I think it's important for our audience to also know that, you know, working with Ndovu, everything is safe.
Yes.
So what are some of the things that you could say to our audience about, okay, if you save your money on Ndovu, if you make this investment, and you talked about the minimum, what is the maximum investment that someone can make? But what are some of your
so in terms of maximum, there's no maximum. We have clients, we have low aspiring, we call them aspiring, so low income, trying to grow. Then we have our middle income, who are who are thrifty investors that are like getting used to it, learning how to grow their wealth. And then we have high net worth individuals. And so the ticket size is really large. Again, when you start a business, you should also focus on a particular subset. We went broad and then we went narrow. And that's worked really well for us. And now we're expanding our segment. But in terms of like the security question, the one thing I say to everybody is, when you invest your money, there's certain things you need to ask the provider, whether it's Ndovu, whether it's another investment platform, another fintech. First question is, where does my money sit? Alice is giving me 100,000 shillings. So you should be asking, okay, once I give you the 100,000 shillings, what happens to my money? Where does it sit? And once you're regulated, that's the importance of being regulated. Your money doesn't sit in my operational account with how I pay my salaries. It actually has this flow. So Alice gives me 100,000 shillings. She's going to invest in the technology fund. That money goes into a custodian account, which is separate to Ndovu's operations. The system talks to the custodian to say, please go buy 100,000 shillings worth of units in the techie fund for Alice. Then the money moves to the broker, because now you bought the assets, and the assets come back and sit with custody under your name in an actual custodian account. So custodian is like a big brother that sort of makes sure that if something happened to Ndovu, not that it will, but if it happened, the regulator could get in touch with this big brother bank to say, hey, listen, Alice had 100,000 shillings worth of units. Hopefully by then it's grown. What do we do? And this model isn't the same model that all these other big billboards, I'm not going to mention names, of these trading platforms you see online, because they trade in something very different. And in this scenario, not that Ndovu would go under, but if we went under, you have your assets stored somewhere. And it's not related to Ndovu, you still have your assets, because we're actually buying assets. Other wealth techs, and I wouldn't say wealth techs, they're more trading platforms. They buy something that mimic. So you're holding a fake instrument, and it's a great way to do it. It's cheap, works really well for traders, but not retail market. So when I say traders, I'm talking about institutional individuals. And in that scenario, we're regulated. You know, we have custodian banks. Check out our website. You'll see who they are. If anything happened to Ndovu, your assets are somewhere. Yes, it might take 6 months for you to get them back, but we're regulated by the SEC in the States, FINRA, FCA. These are all global regulators, and the local one. So they'll talk to each other and say, hey, we have, because we now have $14 million on our platform. They'll say, hey, we have $14 million of assets. This company went under, what do we do? And so they talk to each other, and then you get your money. So the question they typically ask is, do you want to sell, or do you want to move to someone else? And so it's up to you. But those mechanisms are there to safeguard your money. Secondly, I'm here to help people create wealth. That's why I've not given you a trading platform. 85% of people who trade stocks, who are retail investors, lose money. 85%. Okay, that's huge. On our platform today, we don't do trading. We're creating wealth. The average return a user has been anywhere during this year, because it goes up and down as markets go, 13 to 20% on the dollar. That's a huge difference. So we have 55,000 users. They've all experienced a return anywhere from 13 to 20% on the dollar, versus 85% people who do day trading losing money. And I think just having that ethos, everything we do as a firm is based on keeping my customers' money safe.
Yeah.
I truly believe that when you create financial wellness impact, that will come back to me and the firm and the organization. So I don't engage in any ideas of making money quick. There is no such thing. Rome wasn't built in a day. And one thing I also say, and this is digressing, is if you look at or you read around different subject areas, so not just finance, but the way certain operations work and how different industries work, there's never been like this incredible growth in a company that's been sustainable for years, right? Mm-hmm. So if you think about it, for you to become a really good influencer, it's taken you years of practice, an actor, practicing, etc. It's taken time. Mm-hmm. And that's the same way to grow a company. If you look at like the large companies that we were talking about earlier who said, they had significant success, but where are they now when markets got hard? Where are they now? Mm. They've shut down, they've consolidated. So actually the same thing with wealth. It doesn't come overnight. You have to work hard at it. It's no secret. Keep it simple. And just know that that's how life is done, right? Yes, you take some risk and they really work out, but you also fail. And that's okay. And going back to making sure you're not taking all your risk in crypto, mm-hmm. You're breaking it down. You're taking a bit more risk. You're taking 10% of your portfolio and saying, right, maybe I can do well, but the rest is fine. Mm-hmm. And that's how you need to start thinking about it. Mm-hmm. Rome wasn't built in a day, and there's a reason for it. And mm-hmm. your portfolio is not going to grow by 200%. And if it does, it's very likely you'll lose it. Mm-hmm. So just thinking about, we want to build your wealth responsibly. We're not going to promise you high, strong returns. We're not the platform for that. And so if you're looking for 200% return, we're not the guys. We'll help you create wealth responsibly.
Yeah, I think that's really important to take note of, because, I mean, we've heard cases over and over again of investment platforms that are coming up. We've had the Robin Hoods that, had the situation that they did, and you couldn't get customers back their funds into their pockets. I'm pretty sure until now that hasn't been fully resolved. We've had some Altman, if I'm not wrong, that happened to him recently. Again, another investment platform where it's not, there's a window where there's the information that is not very clear to the customer. Okay, where is my money actually being stored? I think it's, as a customer, when you're listening to this and you're giving your investments, it's very important for you to really understand what the liabilities or the security things that you need to consider when you decide to invest your money, especially as it keeps scaling and keep growing,
And so, Alice, it's not that hard. You just need to ask somebody at the company,
ask the right questions.
Where is my money sitting? What happens if Ndovu goes under? What happens if this investment company goes under? And if they can't give you a clear answer, that doesn't make sense. That is
a sign.
Yeah, it's
going to be a sign.
Yeah.
Okay, wow, this has been such an amazing episode. I want to keep going, but we are limited of time. Before we get into the closing questions, I think it's really important because for us to talk about this, I had mentioned earlier, and that is to do with marketing and scaling your product, even just outside of the context of investment. I strongly believe and push for the message that, startups should actually start that. And that is a problem that maybe I could solve for. Yeah. But startups really, when you're starting your business, you're thinking a lot more of the product.
Correct.
And of course, you're told to focus on the customers. Then great. Then is this product a good fit for the customer? That's great. But you don't really think, okay, how do I get even more people interested in this product? Because a huge part of you getting profits, or for you to get, make your investors happy, is to actually get people using your product and getting revenue off of that. So, and I think that's where a lot of people miss the line, and they don't think of marketing as something that they should consider as they begin their building. Mm-hmm. So I wanted to get your insights on that.
Yeah. So, I mean, Alice, that is a tough learning that we learned as an organization.
Yeah.
And I think more so like getting the right marketing team in place. Okay. So 3 of us founders have no experience in marketing. And then so we got our first 300 customers and was like, right, now we need to create awareness around the brand. Mm-hmm. We didn't realize the importance of marketing for a long time. Because, we're very much, we were getting referrals and we were growing and we're still learning the product. The product has got great. But it wasn't until I learned that actually marketing is all about, so there's a funnel. I didn't know this before, and maybe a lot of people on this podcast didn't know, but there's awareness. You have to first get people to know that you exist. And then there's different nuances in every market. So, social media ads would do really well for a specific industry. Influencers do well. But for a financial company, actually traditional things do well, like print and on-board and billboards and on-ground events versus like, somebody can buy a skincare product and say, oh, it's fine.
It's influencers.
But, with finance, it's different. And so we had a lot of learning. We had a lot of learning, a lot of mistakes. Sometimes I look back and I think, oh my God, I wasted so much money. But this is part
of the
journey. Exactly. Yeah. And so when was it? It was mid last year when I decided, right, now we have a strong product. I now know what my customers want. I'm going to start putting in the right team. And we started that. And now I can say that I'm in a very comfortable place. I have all the right facets in order to build a very strong team. But I wish I did this a year and a half ago. Like I wish we had this team at the beginning of 2023, because that's what will grow our business. And that's what's growing our business today.
I think it's also usually very important. Also, marketers are not magicians, right?
Yes.
So a huge part of the job is also for us to really understand what product it is that we're doing. I need to the point where even the information that you might think is irrelevant, like, okay, where's the money stored? How do
no one cares about that? That's not in your marketing. Like that comes later, right?
Yeah, no, that comes later. But
I learned that.
What I'm saying is, as the marketer, I know about the funnel and what I need to do. So the difference between how I push the product to the audiences or to get more people engaged when I have full on context, especially if you're a marketer who's not done experience in tech and you're entering the tech space. What is it? And I'm not that in this case, if I'm marketing for Ndovu, I need to know a lot more about investments. How have people been doing it previously? Listen to podcasts, listen to this. But like essentially what people do is, okay, we need a marketing team ASAP. Okay, within the next 2 months, we need about 200,000 users.
Yeah.
Get them to me.
That's how
that's how you were doing it. And then if they don't perform, then it's like, okay, maybe, of course, part of it can also be the skill set, but a huge part of it is we also need to fall in love with the thing, or at least for me, with the thing that I'm trying to promote. So, yeah.
So Alice, it's actually at a startup, and if any of you think you're starting a company, whoever you hire should be in love with the brand.
Yes.
Should be in love with what you're building. And I will happily say now our team is there. Yeah. And they see, they're like, oh my God, we're actually helping people create wealth.
Yeah.
And now they're there.
I can see it even when I speak to people from the team.
Yeah, and like they actually work day and night. Like it's
you want to do it, and you can feel a detachment. I think even as a founder, a leader of a team, like you can feel a detachment from someone who's not
into it.
And like it's not your fault. It's okay. Sometimes you can lose track, but like the difference between working with someone who's equally as passionate, or I mean, not equally, it doesn't always have to be equally because it's your product. I mean, they can't fall in love with it equally, but have a sense of, I really want this to work. It creates the difference. The team is everything.
So the one thing we do is we get our team to invest in the product themselves. So they have accounts. And so if you are performing well, we actually sometimes top up your account, because we want you if you don't use your own product, how are you going to sell it? How are you going to build it? How are you? So it's really
actually just marketers, the whole team.
The whole team,
yeah. So what you're saying is that you felt that you started marketing a bit, or having the right team for marketing late into the journey.
It's actually not even the marketer's fault. You said it really well. It's actually the founder's understanding of marketing, and I'm guilty of it. You're like, right, I've got a marketing team now. Overnight, they're going to get me 1,000 signups, and no, there's like 1 million steps. And now I get it, and I'm glad I learned it, because now I can replicate it in other markets. And but I think as a founder, you go through that journey. But I also think it's important for marketers to help us, bring us along the journey and say, look, this is how it works, and I will promise you results, but in 6 months, not in 2 months.
And
time.
Not lie about it, because that's what a lot of marketers and salespeople do, because this is even just me working in the space and interacting with other marketers and salespeople. There's always an over-exaggeration about the numbers or what they're able to do. Yeah, in 2 months you want this, I'm able to do this, and then lay out a strategy. It might look practical at the beginning, but as an alternative, like that's a big red flag, I would say, if you're looking to start your own business or looking at marketing, is that when you're doing your interviews, is how honest are they gonna be about maybe what they're gonna do? I'm like, okay, great, you want this amount of followers here, this is how we're gonna do it, but also this is not gonna be like instantaneous. Like, you need to go through the funnels, brand awareness. Do people even know who you are? How do we start building that? Do we need to go on the ground? Do we need to do this? Rather than, okay, we're gonna do ads. We're gonna do Facebook ads. We're gonna spend $50, $100 every day. First, we're gonna spend a lot of money to track how the first month goes, and then the second month, now we know what the insights are. They're guessing. A lot of it is a guessing game. I mean, yes, you can know what the data and everything, but someone who is truly someone who is a good fit for helping you push your product is, are they really interested to know more about what you're doing, and two, are they promising you some magical upcoming, or are they telling you, okay, strategically, maybe you need to go through these funnels, this is what we're going to do, this is what we can do quick, this is what we really need to look forward to, organic growth, etc. So, yeah.
And I will say one last thing, because I know we're running out of time, but your referral customers are the best customers you can have. They're the real guys. They're the ones who are saying, we love your product, so they tell a friend.
Yes.
It's the best way to grow.
It's the best way.
And it takes time. So trust the process.
It still takes time. And like everything else in the world, everything takes time. And so does marketing. And just one last thing that I would add into that. Oh, the point cannot be gone at this time. Oh, yes. What I wanted to add is that another tell is like, okay, if you have a budget of, let's say, $2,000, how are they going to look at that budget? Are they going to put it? My strong ethos in marketing is like, okay, how can we maximize this with everything that we got? Okay, so maybe referrals work. Can we have a product marketing strategy that is within the product? Can we have offerings within the product? Or just not throwing money as the solution to things?
Correct.
Is what I'm trying to say, but really thinking about how this is going to essentially get you customers, not just, oh, they've seen this brand awareness, this and that. It's like, how are we going to split this? Are we, instead of using influencers, what can we do inside the team first to help build that? Does that mean that instead of spending $2,000 on influencers, do we spend $2,000 with writers who are going to write blog articles, and then we have in-app promotions, email marketings? Like, there's so much more you can do with that money. So those are some of the tips that I have when you're looking at
and
that.
Alice, I think you're absolutely right, because that's what I've come to learn after 2 years. So well done.
Good marketers.
Yeah.
Hit me up. All right. Okay. We're going to go ahead and get to the closing questions, Radhika. The first one I have is that, just what is the most valuable lesson that you've learned throughout your tech journey, or your journey in general?
Never take no for an answer. And don't let someone tell you can't do it, because they're not doing it. So how do they know you can't do it? We were told, we were given a lot of no's. Just keep going. Just keep going. And no is like, okay, redirection. Yeah. So actually, weirdly enough, recently I wasn't even fundraising, but I spoke to an investor, and then they sent me an email saying, yeah, we're not interested. And I thought, that's a really, so hearing no is, it's actually quite painful, because I haven't heard it in a while, especially from investors, because I haven't been fundraising. And it took me by surprise, but then I was also like, but I didn't ask you for money. But the thing is, I was like, it's fine. A no is one step closer to a yes. A no is what what was the saying? You're one conversation away from beating someone who might just change your life. Exactly. Yeah. And actually, weirdly enough, this is what I love. So that's the second most magical thing I've have experienced during this entrepreneurial journey, is that you meet people. I never say no to a coffee, because you meet people that always help you, and in different ways, right? They'll give you advice on a personal life, parenting, a different facet, growing your business. And I never take, so anytime anyone reaches out and I have the capacity, I tend to do it on Fridays, go for a coffee, I would do it, because you're one conversation away from your life changing. Exactly. Yeah, literally. Best saying someone has ever said on this podcast. Okay. And what advice would you give to your younger self starting out? Oh, yeah. So I was actually speaking to someone, I think it was the day before yesterday. Yeah. And the one thing I was like, oh, I've met these incredible founders. They're 21, 22. David is 22, doing great. And I was like, oh my God, I've started this journey quite late. But actually, the best advice I realized was, my younger self is do everything, try everything. When someone at work is like, hey, I need your help on XYZ, take it, do it. And the reason being is because when I was at BlackRock, I had to manage an investment platform, which I hated. It was a lot of operational work, less sales. And guess what? Fast forward 5 years, I set up my own investment platform. And so the best advice I can give someone young is you have nothing to lose. You're a sponge. Try so many things. Go for coffees, ask for help. No one's judging you. If you are 21 and asking a question, everyone's like, yeah, I mean, they've just started work. It's normal. But if you're 32 and asking that question, it's like, oof.
Yeah.
You know, so the thing I could give everybody is try things, listen to podcasts. There's so much out there nowadays. ChatGPT is a game changer.
Literally.
If you just go watch a YouTube video that says, ask ChatGPT how to do things, marketing plans, marketing budgets, anything can be done by ChatGPT. It analyzes data for you. It blows my mind.
I'm Team Cloud, just saying.
Oh, yeah, whichever one. I'm talking about an AI tool, whichever one. And honestly, it's like you can do so much more. Oh, and the other thing, actually, I was listening to a podcast, so this is not mine, but I thought was really powerful was once you understand where you're going, you need to be in the right room at the right time. So if you are a personal trainer in Kenya, as an example, personal training is picked up, but you don't get top dollars. So you need to move to a city like Dubai that is, you know, high profile. People pay a lot of money. Go build your brand there. Yeah, be in the right place at the right time. But think about where you're going. Where do you want to go?
Where do you want to go? Yeah, no, I agree with that. Thank you for that piece of advice.
Yes.
As my younger self, I'm taking it.
Indeed.
Okay, I guess what excites you most really about the future of investments landscape based on the trends that you've even been seeing in the interactions with your customers? What do you think excites you the most about the future of investments across the continent?
I like to see the stock market as a reflection of human progress. Right? So if you look at the stock market 100 years, it's always gone to the right. I think we are at the brink and we just explored tech innovation. And so the reason we see the market as human progress is that if companies continue innovating, distributing, producing, the internet has made it more accessible for people with low incomes to create new jobs. People are working on Upwork, all these other ways to create new ways of income. That means your consumption is going to go up. And my thing that I'm most excited about this is that if we've just scratched the surface with innovation, the amount of growth we're going to see in the stock market is yet to come.
Ooh.
So the thing that I'm most excited about is to experience that growth and be in a place where we can empower people to actually be part of the growth. And I think you haven't asked me this, but the one thing I think would be success for Ndovu as a company is like somebody taps you on the shoulder 5 years, down the line, they're like, hey, because of you, I actually am able to send my child to university in the States or the UK. Vis-a-vis, before that, I wouldn't have been able to save
to do it.
Yeah.
Because
or like I could start this business so I don't have to go to work. Yeah. Actually, I now have this money that I'm not worried about.
Yeah.
That for me is success.
No, and I think you're definitely on the way towards that. You've already mentioned people already using the platform.
Yeah.
You can see the investments that are happening. You can see the growth that happened last year in specific sectors. And I have no doubt if you keep doing what you're doing, that is something that is a possibility.
Yeah,
and
thanks,
I hope that I'm also one of those people.
Yeah.
Once my Ndovu investments get me out the hood.
Yeah, they will, I promise. Keep at it. Discipline is key.
Discipline is key.
Yeah.
All right.
Wonderful.
Thank you so much.
Thank you for
Radhika.
having me.
This has been amazing. And we can't wait to see the progress. You can maybe tell our audience where they can find you or Ndovu where they can download it.
Yeah. So you can find Ndovu on the iOS store and the Google Play Store. And the logo is, so just search for Ndovu and it's a orange icon that looks like an elephant.
Yeah. Awesome. And thank you so much for tuning into this week's episode. If you've enjoyed this episode and you've reached this far, please subscribe if you haven't already. Check out My Tech Story Africa on all the major social media platforms. And finally, check out our website, mtsafrica.co. We are having a very exciting revamp that I'm sure I'll tell you more about in the episodes to come. So stay tuned and I'll see you in the next one. Bye.